Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Hello everyone, welcome back to another episode of Broker Daily Uncut. Your host Jack Campbell here. We are fresh in the studio on a Monday morning off the back of the Broker Innovation Summit and Awards. It was a busy day. Thank you for everyone who came along and congratulations to everyone that took home a trophy at the inaugural event. Phil, Alex, as usual, are joining me today. I saw you guys sort of midday at the summit. How'd the rest of the day go for you two?
Oh, it's good, yeah. Oh, I saw you first thing in the morning, Jack. I was there for your introductory speech.
Yeah,
you're obviously so focused.
It was a busy day.
So we did the session with the finalists first thing in the morning, which I thought was a really good kickoff to the session. And what a great space. It's really difficult to kind of emphasise how much of an impact the environment you're in can have on sort of the stimulation in terms of learning and was it the Telstra? Is it the Telstra building?
Telstra building, yeah.
Yeah, the format and and just sort of the layout of that place was just really, really good. And there was an energy in that place from the moment we walked in, and we got Todd Duncan over from the States, really bringing a very different perspective around the importance of trust. And look, this has been his proposition for decades, but it's something that really sort of holds true. But I think also really sort of the focus, I mean, innovation is the theme, but look, the reality is it ends up manifesting itself in technology and particularly in and around AI. And I thought the content from the keynote speakers and also from the panelists was just superb. You hosted, panel discussions and you sort of the custodian of the day. I thought it was great. The feedback was phenomenal. People standing up in the auditorium and getting told to move by the military police that are employed by Telstra.
Yeah, it was a packed event. The auditorium, as you said, there were people lining up on the side and sitting down on the stairs. So obviously people were interested and engaged. I had a lot of people come to me with feedback as well, saying that the content was varied and a lot of tangible things they could take away and implement in their business. So some good feedback. Phil, I saw you midday. We recorded our impromptu session of Uncut. How did you go the rest of the day?
Yeah, good. I spent some time in and around the event, spoke with some of the delegates there, but also some of the key partners that you had down there, and really engaged and connected. There was very senior people down there who were a bit incognito. That people who have been, in many ways, the nucleus of advancing technology in and around the third-party distribution space for some time. A lot of people you might not know unless you know them, who are some of the brightest minds in, cultivating what would be a bright future for technology and specifically AI in and around third parties. So for me to see them down there, it sort of was an acknowledgement, I think, that you guys got the content absolutely right. And they're senior people who are more practitioners of creating technology, but a lot of the brokers I spoke to as well, the sentiment is that there's a bright future for mortgage broking, but mortgage broking needs to continually advance itself in how it leverages tools and technology and AI to support that. So there's got to be some thinking, I think, around board tables and meeting room tables about how brokers can embrace some of those ideas and configure their businesses or transform their businesses to really capitalise on mortgage broking into the future.
I think it's a bit more coalface. I don't think you're necessarily wrong there, Phil, but I'd see this as being much more coalface. Boardrooms and major organisations move slowly. I think the really exciting thing about what we're doing here is giving insight and helping brokers shape their own ideas. And I don't think there's any brokers or many brokers sort of sat there going, this is mind-blowing, I'd never thought of this. I think what you're doing is you're helping to shape, guide brokers in practical terms in the absolute flood of innovation, of new technologies. Every day there's a new app or a new thing to subscribe to, and I think brokers are very switched on. I think the value of the Innovation Summit is really helping give some context to those at the forefront. The proposition will still be the same in terms of getting the best possible outcomes for the customer, but I think the way that is done will change radically. And I think, and in the 20 odd years that I've worked around mortgage broking, you have some very bright minds, not just in terms of the mechanics of mortgage broking, but in terms of really sort of honing that customer proposition. And there's tons of content. And we've come straight out, and we've never done this before. We come straight out of the back of this and immediately launched a Melbourne event.
Yeah, I heard about that.
Yeah,
That's
so
really cool.
you know, and it's not the way we do things. We usually spend a long time planning, a long time organising and scheduling, sometimes years in ahead, particularly around events. But Michael McGee, Jack, and the crew straight out, and they're going to roll it out for Melbourne because it's a must-attend event.
What I would like to see, and no doubt a lot of brokers probably see the world the same way, is that great ideas and conceptually these tools are brilliant and how they can change your business. But when it gets to the point of actually trying to bolt them into your business and get them working, there's not a lot of discussions around the realities of that. And how many of these different tools you need? How do you choose which one is right for you? What is really the practical dynamics of inserting a new piece of technology into your systems and processes? That's where it gets hard. And that's when you sit there and just go, oh, it doesn't work, or how do I make this work? Or, okay, if I'm going to do this, that means I need to do this, 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 and this. So it's never really that simple, the integration, execution of it. And I'd say to brokers, be very open-minded when it comes to that, because it's not going to be perfect by any means, and don't take on too much too quickly.
Yeah, well, I think overarching theme of the day and talking to a lot of people in the lead up to the event around innovation is just to be curious and continuous learning.
Absolutely.
I think events like that are important to wrap your head around it, because it is, as we said last week, the new frontier, and it is scary and it is new to a lot of people, but keeping your ear to the ground and staying up with it will help you in the long run. We'll just throw to a quick break. We'll be back with more content after this. And we're back with Broker Daily Uncut now, moving on a little bit to the news and a bit of innovation that came out in a piece that caught my eye last week, was pretty interesting, was the whole crypto discussion over in America. Two of the most American-sounding mortgage lenders, Freddie Mac and Fannie Mae, were ordered by the government to consider cryptocurrency as a form of wealth when servicing mortgages, and had a chat to some crypto experts over here in Australia, whether or not that would come to Australia. Do you guys ever get tied up in the Bitcoin
So
hype?
just to be clear, this is so if I've got some crypto, it's going to be considered in my ability to service a loan. Is that what you're saying?
Well, over in America, that's what they ordered for two mortgage lenders.
Well, why would it not be?
Well, it's not here in Australia.
So if I've got 300 grand in crypto, that's not considered.
No, not at the moment.
That seems very
Well,
bizarre.
it just depends whether they're seen as an asset, or the issue you have with investments when you look at and when you're looking at someone's ability to pay a mortgage. If you've got real property or shares, for example, they have a value, but they also produce cash flow. So an investment property creates income through rents. Shares create income through providing dividends. Crypto doesn't do that.
The problem with crypto is also volatile, but and the problem with crypto is it means a multitude of different coins, right? It's not just Bitcoin. It can be anything. It's an umbrella. But I think not to consider it is an oversight. If you've got like a sizable amount, if you've got a few bucks in there as a bit of a gamble, then no worries. But if you've got a certain amount of money tied up, and if you look at the overall profile of the borrower, you can see if somebody's speculatively day trading crypto and might end up losing a lot. But it's got to be part of part of a consideration if you have a sizable amount of money tied up. But
the utility of it is only if you need the money. You've got to be able to
it's
sell
pretty
it.
liquid. I don't know. I've never touched crypto. I assume it's liquid.
It's liquid, but when you choose to sell it is pretty important
because
right?
it's volatile.
Yeah.
But it is still liquid, like like shares. It's no different to shares, right?
Yeah, but it's it need to be tested. Someone buying a property and they can't service the debt, and the bank coming after you to try and get their dough back. Yes,
there has to be some consideration around. If I've got $500,000 in crypto, or 200 grand, or $100,000, it's still savings of one sort or another.
Yeah, well, I think that was the argument that some of the people I was chatting to made why it wouldn't come to Australia, was because it was volatile and not as accepted as it is in America. But then the counter argument was that it has become a lot more accepted in recent years, and then that could make way for things like non-bank lenders to enter the space and only service through crypto, which sounds pretty wild. But you think about how many non-bank lenders are there.
I absolutely detest crypto on a personal level. I'm sorry if I'm offending or annoying people, but I've got no time for it whatsoever. I lose enough money on my shares.
So if you had your crystal ball, Phil, would you imagine crypto ever entering the equation for mortgage serviceability?
Unfortunately, in Australia, and we've sort of spoken about this, not specifically around crypto, but other things, is that the ability of our regulators and our bureaucrats to keep up with technological advancements and change, if you look back through history, it's a pretty poor score sheet. The type of innovation available to shaping how people do things in Australia today is well ahead of people putting the policies around it to shape it and manoeuvre it. So it's going to be so far out of the thinking, I think, for the moment of bureaucrats, call them what they are, from even worrying about trying to legislate this or regulate this. That will be my opinion, because they can't even keep up with more simple sort of concepts in innovation. And we saw the Treasurer just the other week sort of coming out and speaking at the press club saying, we want to remove red tape. Red tape is the inhibitor of advancement. It's the inhibitor of innovation. We're a nation of red tape. We can thank our English friends for that, because they put it in. Hang on. Can you let me finish? Yeah, let me finish. We took the concept from them and we've just overcooked it.
Totally.
That was going to be my point. You guys are a lot better than we are.
We realise what a bad idea is when we shipped it out to you lot.
Yeah. But this is the issue. So for someone to sit there and go, this is so important that we start rethinking. And this has got to be an APRA thing, right? Like, whether or not crypto should be considered an asset for the purpose of serviceability of mortgages or whatever else that the thing is, mate, they're just not going to get around to it for 20 years, unfortunately. That would be my view. And call me a cynic. But there's so many other things that they can't even get right, let alone this.
Well, I think it's a detriment to the consumers who are involved in it, because it's such a big...
I totally agree. I like I say, I'm not a fan of crypto myself, but I think everyone is entitled to invest in whatever they choose to invest in, and it's hardly a new concept.
I got a cab the other day. So it was an Uber, because I was out in the middle of somewhere. And as soon as I sat in the car, this bloke there driving a Tesla, right? And these are the new taxi drivers on property. And he wanted to engage me straight away. I didn't really want to talk to him. But he's like, hey, how you going? I went, all right. And he goes, where are you going? And I went, work. And he goes, what do you do? And I went, not much. A bit of this and a bit of that. And he goes, all he wanted to do was talk to me about crypto. So he started talking about crypto for the 20 minutes I was in a car with him, telling me how much money he's made, and he's going, but you've got to buy and sell at the right time. And you can see he's on forums and he's got all my friends down to crypto, but if you don't sell at the right time, you're going to lose all your money, halves all the time, blah, blah, blah. And it's just at me constantly, right? And it's the same as the old proverbial uncle at a barbecue telling you to buy property, or the taxi driver sort of, it's crypto now. And this guy was obsessed with it, absolutely obsessed. It sounds like he made a lot of money. But I said, I didn't say to him, why are you driving an Uber,
a friend of yours and mine who's a tradie and works hard and a good guy and has invested a lot in the property. He went all in, and everyone else,
told everyone.
They're all the tradies, we're all the fitters, all the techs, all in crypto, and then he lost a load of money and they went quiet about it, then started again. Then he went, no, I've thought all about it now, and I now have the formula. There's a lot of people who've made a lot of money,
Yeah, but it's like smart property investment. When we kicked that off, we did that because we said the only stories you saw in property investment of people sort of becoming a bazillionaire overnight, right?
But the good thing about property for idiots like me is that it's not a liquid asset, right? It's really hard to make a knee-jerk bad decision with property. I'm selling it all because you've got to wait, you've got to list it, you've got to find a buyer.
Because the Uber guy told me to.
Yeah, but with crypto, so the whole fear and greed thing, it's the same with shares. Really, is the panic can set in, or you hold on to something for too long, and unless you are very disciplined, or very lucky, or maybe both, you are a liability, because somebody else's losses is somebody else's gain in that game. With property, it's a very forgiving. It's a very forgiving way to invest your money, and we're getting very, very deviated from the purpose of this podcast. But the reason we launched Smart Property Investment is there were other media outlets that had all this nonsense about people who became millionaires, and they ignored every single cost associated with the property, and ignored all sorts of really critical things to give this sort of pumped up, spruiky type, view, which is very attractive around property gains. The reality with property is it's a very slow burning. Really, the margins, if you do it properly, but for the long term, are not as attractive as they might look. But it's a very, very sustainable way to build generational wealth or long-term wealth. Anyway,
and this goes back to round out the point. The regulators, right? The regulatory sort of mindset in Australia is a natural handbrake on conservatism, right? And that's the way it's going to stay for some time. I can't see any major shift at any point soon in relation to this.
Well, everyone listening, don't take financial advice from your cabbie. Go and seek elsewhere.
Or from me or Phil.
We'll just throw to another break. We'll be back after this. And we're back with Broker Daily Uncut. Now, a big theme of the day at the Broker Innovation Summit was diversification, branching out and expanding beyond purely resi. I know a lot of brokers thrive in that space, but it's a changing market. Well, some data from the MFAA, record numbers of brokers diversifying. It's almost at a third now. 31.54% of mortgage brokers are also writing commercial loans. So
31.54. So is this a new metric they've got, is it?
This is data between April and September last year, so it may have grown since then, but it's the latest data we've got. And that's up from 30.6%.
On commercial property or commercial finance?
It just says writing commercial loans.
Okay. Yeah. So that could be a lot of sort of business
sort of
lending
umbrella
stuff.
term, yeah. But a lot more brokers than ever branching out, diversifying.
Well, I'd like to know how much of that is property related, because what I've seen just over the last sort of 4 to 5 years is alongside the sort of rise of buyer's agents, you've really seen a rise running in parallel of that with commercial property investment. A lot of Australians are now considering commercial property earlier on in their property investment, life cycle, and they're getting in a lot earlier. And a lot of that is metrics of residential property. This whole idea that you can create wealth in resi property and create a portfolio that gives you $150,000 a year as a passive income. It's pretty hard under the current mechanics of resi property. So a lot more people going into commercial for the purpose of cash flow. So I would imagine some of that would be consumer-led, asking their brokers to write commercial property finance, because there is considerably more. It's hard to get the numbers, and I'm just talking anecdotally, but there's considerably more commercial real estate investors these days.
Yeah, it would make sense. I mean, Trent Carter and I on the Finance Specialist podcast talk about it all the time, that if a borrower comes to you and you're not able to provide them the services they need, so say they come to you with a commercial loan, they're going to go to someone else who can, unless you have a referral network set up. So makes total sense. And if you're seeing those trends of more and more people branching out into commercial.
The main issue is understanding how to compare products in that space. It's a much more level playing field in residential products. It's quite easy to evaluate. I'm sure there's aggregators tuning in that will tell me that they've got software and programs to help brokers do that. And I think that there is a very, very big opportunity for brokers to move into that space. And the opportunity, as you highlight there, Jack, is really to provide solutions for your customers in their debt requirements. And there's many brokers that are part of bigger ecosystems where there's financial advice and all sorts of different types of advice. And I'm not saying that that's not also really valuable, but I think looking at the customer proposition, if you're a debt-based professional, being able to facilitate the customer around their various debt needs and being educated and having the assistance and transparency to make product recommendations. But it is very, very, there's a lot. I think a lot of brokers are cautious because there are liabilities around it, because it's harder to know in a less measurable marketplace if the deal is really, really good for the borrower. When we did the commercial roundtable, Jack, we heard many stories about the dangers of resi brokers going into an area where it's harder to compare products.
Yeah, I mean, we've seen it with the rise of SMSF as well. The varying needs of the consumer, and brokers have to be on the front foot about it and aware.
That would be for me where if brokers are just at the moment just concentrating on doing sort of resi lending, sort of owner-occupied or small investment stuff, I would say picking up a skill set to service the SMSF sector would be something every broker needs to be looking at right now. I hosted a roundtable conversation last week with a very sort of well-known buyer's agent, and he spoke at length around SMSFs being the vehicle for people to really sharpen up their wealth creation journey. So they'll start investing in property. They might get a couple of loans in a couple of properties in their personal names, and they'll shift pretty quickly into their self-managed super fund before they even start thinking about trust-based lending and or commercial-based lending. So I would say SMSF could be a really nice pivot point for a lot of brokers who might just be doing, I'll use the term run-of-the-mill type mortgage broking. They want to get a little bit more sophisticated in advance and plan into the future. Start with SMSF. Get your craft there of learning something new, and from that moving into commercial-based lending or trust-based lending will be a much simpler iterative process for them. There's a lot of people in that space now.
So, and I think it's a really good point. And there's lots of brokers who are exceptional at residential lending, and there's lots of brokers that will continue to do that. The reality is, though, when you come into mortgage broking, to be exceptional at residential lending is, it's not easy. There are so many residential lenders that I think to start to gain a real sort of competitive advantage in your particular area of broking, there are bigger and better opportunities by looking at the overall needs of the customer. Look, I'm sure there's resi brokers who wouldn't move from resi broking and do an excellent job, but as the industry grows, and this is a growing profession, we're getting growing demand from borrowers. We're seeing growing numbers of brokers coming in, and I think how hard brokers work. I want to see every broker be the best they can possibly be to be rewarded for their endeavours, and having a sort of a more diverse proposition to your customer and building your business around the needs of your customer. If that's just residential customers and you've got good access to that market, then that's all well and good.
What I see a lot, Jack, happens, and this is something for all brokers to be very conscious about. It's where your client outgrows you. So a lot of property investors, whether they kick off, owner occupier, first home buyer, then over time, right, that they'll become a lot more sophisticated in their wealth creation pathway through leveraging property. So unless the broker can keep up with that sophistication, inherently that client will go to someone who is sophisticated enough to service them from where they are. So you've got to make sure that your client base, you're on an equal or equivalent pathway or slightly advanced than what they are, to ensure your relevance as they grow and evolve. As a mortgage broker, if you start off with a first home buyer, you might have a relationship with a client for 20, 30 years plus and beyond. So unless you're growing alongside them, they're just going to grow past you. And it's a relationship that's going to fracture and break down. Yeah,
well, you say more and more are turning away from residential property and branching off into commercial. If you're not able to service that loan, they're going to go to someone else, right?
Yeah, so it's continued professional development, what it needs to be. And it's a mindset for growth, and all brokers need to embrace that.
Well, an important lesson to finish off the episode. Thanks to everyone for joining again. If you want to see more content, editor at brokerdaily.au. Reach out to me, brokerdaily.au, for more articles and more podcasts. We'll chat to you again next week. Cheers.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.